Welcome to Proven and Probable, where we focus on metals, mining, and more. I'm your host, Maurice Jackson. Joining us today is Sam Broom. He's an investment executive at Sprott Global Resource Investments. And today we will discuss nickel and cobalt propositions for your portfolio. Mr. Broom, welcome to the show, sir.
Maurice, thanks. It's a pleasure to be here.
We brought you on the show today because you've truly carved out a niche for yourself in the space with regards to nickel and cobalt. Many speculators don't hear much about these metals and the value propositions that they may present. So we're delighted to have you on the show here.
Yeah, thanks for having me. I'm looking forward to it.
So let's begin our discussion here with nickel. And Sam, at the 10,000 foot level, share with us the supply and demand fundamentals for nickel.
Sure. Nickel is actually quite an interesting market. It was a darling back in the sort of early to mid, even to late 2000s, up till about 2007 and 8, where the price rose dramatically. A lot of people and a lot of speculators made a lot of money in the nickel market in the 2000s. What basically happened was the Chinese came up with a new way of producing largely stainless steel, which is the main use for nickel. So formerly they were using refined nickel to produce stainless steel, which is nickel is a fairly rare metal. There's not a lot of high quality deposits out there. But what they did was they figured out a way to turn ferronickel, which is basically an iron-rich nickel dirt, weathered rock, and you'd be able to use that as a replacement for refined nickel in creating stainless steel. So that truly was almost like a shale oil moment for the nickel market, and drastically changed the cost structure of the industry. It also coincided with, I guess, the global financial crisis in 2008, and then nickel promptly fell off a cliff. It was trading for about $54,000, $55,000 a ton. It was as low as, I think, almost $7,000 a ton about a year ago. So we're talking an 80% decline over the last 10 years in terms of the nickel price. So what resulted was, all of a sudden you had this flood of nickel, or iron-rich nickel pig iron or ferronickel, that flooded into the market from places like Indonesia and the Philippines, and it basically destroyed the price of nickel. If you look at a chart of the a long-term chart of the nickel, the refined nickel stores on the LME, you'll see exactly what happened. Basically, supply went through the roof, and we saw this huge accumulation of nickel. The nickel market was in a huge surplus for years and years, and so to this very day, there are still huge amounts of nickel on the LME compared to historical norms. So that's why a lot of people still steer clear of the market. One key thing to note, though, is the last few years, the nickel market, or the refined nickel market, has been in a deficit. So if you look at that very same chart, you'll notice that stockpiles have been starting to draw down, and that's initially what got my attention. And I think perhaps we'll get to it later, but that's a very key thing for investors and speculators to keep an eye on. And you'll actually, the drawdown has actually been in excess of what I was expecting at this point in the cycle. So clients of mine will know that I've been talking about nickel for the better part of about 6 to 12 months as being a commodity I think could be one of the best performing commodities over the next few years. And so far, it's the tide is turning, and it's actually exceeding my expectations so far.
Well, you made two interesting points here. You have a supply deficit and an 80% reduction in price here, and that really prompts some unique opportunities here for us. Let me ask you this, if I may. Do you foresee a catalyst that will constrain supply in the future or add to the demand?
Yeah, so I guess the main driver that I see, moving the nickel price higher is it's a very crucial ingredient in just about every every type of lithium-ion battery there are out there. Okay, so if you go and have a look at all the various chemistries, most of them are very nickel-rich. So what we're seeing, or just starting to see, I actually think it hasn't even really hit yet, is increased buying from those getting set in the electric vehicle space, where they need to, they don't actually need refined, nickel metal. The EV industry uses nickel sulfate, which is basically a nickel salt, but you can process refined nickel into nickel sulfate. So we're starting to see a little bit of an impact from that. Nickel is also what I would term a kind of a affluent commodity. Stainless steel is obviously something that a increasingly wealthy population consumes in greater quantities as they become more affluent. So global growth, I actually think global growth in places like China and the developing world is driving this nickel drawdown at the moment. But I do foresee that in the near future, probably not in the next 12 months, but maybe 18 to 24 to 36 months down the track, the growth of the electric vehicle industry is going to be what drives nickel demand, refined nickel demand. And the key thing to note here is that all of that additional supply that came onto the market back in the late 2000s with the invention of nickel pig iron is completely unsuitable and unusable in the electric vehicle space. So basically that can go towards servicing demand from stainless steel fabrication and production, but it cannot be used at all to create electric vehicles and lithium-ion batteries to go into the cathode of lithium-ion batteries. So in a nutshell, that EV demand is going to directly impact on what we term class 1 nickel, which is what the LME stockpiles represent.
You hit on some very key points here, and that's a lot of ambiguity that I hear regarding the nickel spaces. There's excess supply that can be used, and you just addressed it cannot be used. So for our listeners, please do take note here. But I want to stick with this theme here for the supply deficit. Where is current production coming from, and will that remain for the future?
Yeah, so there's two very distinct, again, different styles or different classes of nickel supply here. The pig iron and the ferronickel that's coming out of, that's getting fed into the Chinese blast and arc furnaces. So this is the supply that can't be used by electric vehicle fabricators and manufacturers. Is coming from places like, primarily from places like Indonesia and the Philippines. So basically what they do is they literally just dig it up and put it on a ship and ship it to China, and it's basically like iron, nickel rich dirt that goes over there. So that's where that supply largely comes from. There's a little bit coming out of Australia, but mainly places like New Caledonia, Indonesia and the Philippines. Class 1 nickel or refined nickel comes from a whole host of other places around the world. Major producer is Russia, with Norilsk Nickel, one of the larger mining companies out there that is a major producer of nickel. Outside of that, another major name you probably would have heard of is something like Voisey's Bay up in Canada. But outside of that, there's very little in the way of primary nickel production, primary nickel sulfide productions, I should say. So sulfide mines, we won't get too much into the weeds here, but they are the type of mines that can easily produce refined nickel, and they're very rare, and there has been next to no major discoveries, at least in the last 5 years. The last one I can think of was the Sirius Resources, who was run by legendary Australian prospector Mark Creasy. They discovered the Nova Bollinger, I think it was back in 2012, if I remember rightly. That's the last major nickel sulfide discovery that I can think of. So that was over 5 years ago now. So that gives you an idea about how little nickel exploration there has been and how many new high quality class 1 nickel discoveries and new projects are in the pipeline. It's basically non-existent.
Now, Sam, with the exclusion of Canada, for our listeners, how mining friendly are these jurisdictions?
So, I guess Russia's pretty topical at the moment with the, with all the sanctions that are going on at the moment. The Norilsk, the Russian company I mentioned, their share price got got smashed 20% yesterday on the news. So Russia's kind of self-explanatory. I personally think Russia's very cheap right now, but it does come with a high degree of geopolitical risk given the tensions there. The other, the ferro and the ferronickel and the pig iron producers, I would say, have a moderate to high degree of geopolitical risk. For those of you that aren't familiar, the Philippines have been doing all sorts of things and a lot of talk about cracking down on their mining industry and banning all sorts of open pit mining, basically exclusively because of the damage that these nickel laterite mines have been causing to the countryside. So I would say there's a relatively high degree of risk and potential disruptions to supply from that side. Outside of that, you're looking at places like Australia, Canada, the US, parts of Africa. There's potential around the world, but it's just finding these deposits because they are so rare and so hard to find that we're just seeing next to nothing come through in terms of new high quality sulfide deposits that are capable of cheaply producing class 1 nickel.
Give us some numbers here. What are the global costs for production versus the all-in sustaining costs on nickel?
Yeah, it's hard to give an exact number, but last I checked, I would say cash costs, industry-wide cash costs, are average around somewhere around $4 a pound, $5 a pound. If you take in all-in sustaining costs, you're probably looking above $6.50 a pound. And if you take into consideration the true cost of production, including capital costs, which you should always do, it's probably above $7 or $8 a pound. So nickel's currently trading in the mid $6 a pound, or about $13,000–14,000 a ton. So by and large, the industry is underwater at these prices.
Switching gears, let's delve into cobalt. Sam, again, at the 10,000 foot level, share with us the supply and demand fundamentals for cobalt.
Sure, cobalt's completely different to nickel in a way, even though they're often found together. The main, by far and away the main producer in terms of a jurisdiction of cobalt is the Democratic Republic of Congo, which I would probably describe as one of the worst, I should say the highest. It's a country with the highest geopolitical risk of almost any that I know right now. There's a whole lot of strife in terms of what's happening with the government there. Their formerly democratically elected president has failed to step down as he is constitutionally mandated to. That was over a year ago now. So there's a whole lot of shenanigans going on there, a whole lot of conflict, potential for civil war, that type of thing. I don't know whether that will happen or not, but there's some not good things going on over there. On top of that, it's a very poor country. There's a lot of historical conflicts between different tribes within the country and things like that. So it's not a very safe place to have one of the key ingredients for electric vehicle, lithium-ion batteries, to 65% of global supply coming from this country. So that's what initially got me interested in cobalt well over a year ago. I don't know if you're able to link to some articles, but I can send you some articles, Maurice, that I've put out about a year ago that kind of explain the situation there. But so basically we've got a huge amount of supply coming out of a single country that has extremely elevated geopolitical risk. Demand side of the equation, the main driver moving forward is going to be the growth of electric vehicles. Now, cobalt is, along with nickel and a few other elements, is one of the key ingredients in the cathode component of electric vehicles. So it is the ingredient that controls or has a large impact on both the stability and the amount of energy a battery can store. The amount of time you can draw with the amount of energy that the battery can hold, and it greatly affects the range of your electric vehicles. So I can't see it being replaced anytime soon, and I can see a huge increase in demand coming as electric vehicles proliferate. So given we've got an extremely highly risky geopolitical supply backdrop with a exceptional growth outlook in terms of demand, of the demand side, it's a very interesting proposition. So, and obviously the cobalt price has already gone up dramatically in the last sort of 12 to 18 months. So we're already well into the cobalt price re-rate.
Well, you've already answered part of my question here. So the current production is coming from the DRC, and as a speculator, your eyes light up when you have this geopolitical turmoil. But let me ask you this: will that change in the future? Do you foresee other production countries coming with a production?
Cobalt's a really interesting one because it's rare, but it's relatively pervasive in very low quantities in rocks around the world. But what is really rare is cobalt in economic concentrations. So there are very few places around the world that have cobalt in economic quantities that can be mineable. So basically the main source of cobalt that I see outside of the Congo moving forward is likely to be laterite. So the very same type of deposit that the nickel pig iron we talked about earlier often has very high, or not very high, but economic quantities of cobalt in it. And the one key jurisdiction I've been focusing on is Australia, because it has the same type of deposits as the Philippines and the Indonesias and the New Caledonias that we've talked about, yet it's obviously a far safer jurisdiction. So there are a handful or more of these nickel cobalt laterite plays in Australia, and that's where I've largely been focusing my attention, because I think that the electric vehicle industry is going to value security of supply over price in the mid to long terms. So in other words, they'll be willing to pay up for their nickel and their cobalt in particular, if it's being mined in a jurisdiction they're not worried about blowing up into a civil war and losing that supply in 6 months' time. Because these companies are spending billions of dollars in capex, building these factories. The last thing they need is supply crunch when it comes to cobalt. So I'm keeping a very, very, very close eye on the Australian nickel cobalt plays. I will say though that these type of plays are more of a speculative investment than a investment grade type of proposition. They are, I view them as being almost at the money at current prices. So they do require higher nickel in particular prices, but nickel and cobalt prices to actually pay off in the long run.
Now, Sam, before we leave cobalt here, let me ask you this one final question here, because I asked it about nickel. Talk to us about the global cost for production versus the cash costs and the all-in sustaining cost for cobalt.
Sure, it's very hard to say because probably I would say 97% of cobalt is produced as a byproduct. So there isn't really a cost curve out there for nickel that you can examine. Usually it goes as either a credit towards nickel or copper production. So looking at it in terms of the cost to produce cobalt doesn't, I don't really have any good figures out there. Sorry. What I would say is, look at cobalt as a way to render these other nickel in particular, but nickel and copper projects economic. For example, there's a company I watch relatively closely that just put out a feasibility study. The nickel all-in sustaining costs per pound is something like $5 to $6, and with the cobalt credits that drops to about $1. So that goes to show you how much the cobalt credits they're getting from their project go towards making these projects economic. So basically renders a project that would be completely uneconomic at current nickel prices, moderately economic at current prices, and extremely economic at say $20,000 a ton nickel.
Well, Sam, thank you for a very comprehensive interview regarding cobalt and nickel. Let me ask you this here. Does Sprott Global Resource Investment still provide a free grading of one's natural resource portfolio at no cost and obligation?
Absolutely, yes. So if you want me to take a look at your portfolio, particularly those with a sort of EV metal and material focus, I'd be more than happy to give you a no obligations ranking of your portfolio. Bear in mind that this is not wouldn't be investment advice or anything, and it'd be a 1 to 10 ranking. But if you would like to take me up on that offer, my email is sbroom, so that's SBROOM @sprotglobal.com. So I'd be more than happy to receive your requests and give you no obligations ranking there.
And Sam, let me ask this as well. How do you want someone to forward an email to you? Is this an attachment or just in the body of the email?
Either or, so you can either attach a Excel attachment or simply just list your portfolio in bullet point form in the email.
All right. And also, do we have a contact phone number for you there at Sprott?
Yes, we do. So you can get me at 800-477-7853 and just ask for me. My name again is Sam Broom.
And Sam, give us that number one more time.
It's 800-477-7853.
And for our listeners, we want to remind you to register for the Sprott Natural Resource Symposium, which will be conducted the 17th through the 20th of July in Vancouver, British Columbia. Just click on the registration tab on our website for your tickets. Featured speakers will be Rick Rule, Doug Casey, Jim Rickards, Jim Grant, just to name a few, and we will be present, and we look forward to meeting you. And Sam, let me ask this as well. Will you be in attendance?
I am certainly planning on being there. I have my first child due in early August, so as long as that doesn't happen ahead of schedule, I will certainly be there.
All right, look forward to seeing you there. And last but not least, please visit our website, www.provenandprobable.com, where we interview the most respected names in the natural resource space. You may reach us at contact@provenandprobable.com. Sam Broom of Sprott Global Resource Investments, thank you for joining us today on Proven and Probable.
Thank you for joining us today on Proven and Probable. Remember to like and subscribe for more conversations with the most respected names in the natural resource space. Check out our website at www.provenandprobable.com. The information presented on Proven and Probable is provided for educational and informational purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. The information is not intended to be and does not constitute financial, investment, or trading advice or any other advice. You should not make any financial, investment, or trading decision based on any of the information presented without first undertaking independent due diligence and consultation with a professional broker or competent financial advisor.